Do you ever think about your life insurance policies? Not if you can avoid it, right? But what if your life insurance policies no longer suit your needs or are way overpriced? Today we're going through a composite case study of how we helped a physician couple identify real issues with their policies and find a great solution. I guarantee it's going to make you want to get those policies out of the drawer and come talk to us. Welcome to Wealth Matters for Physicians, the channel brought to you by Altfest Personal Wealth Management that provides physicians with key investing and personal financial planning strategies. For 40 years, physicians have relied on Altfest to help them achieve their financial independence and future that they deserve. We'd be honored to help you. My guest today is Dennis Huergo. Dennis is a Director of Client Services at Altfest and has the Certified Financial Planner, the Chartered Financial Consultant, and the Chartered Life Underwriter designations. So Dennis, thank you very much again for being with us today on Wealth Matters for Physicians.
Thank you for having me.
Excellent. So let's get right to it. So today we're discussing how Altfest really helped a physician couple optimize an important life insurance issue. So let's go right into it. But before we talk about it, giving a little tease. Before we talk about it, can you just give us, physician audience, a little overview of these physician Smith clients that we're going to refer to?
Yeah, absolutely. This couple is very similar to a lot of the clients that we've onboarded recently and over our last 40 years of experience here working with physicians. But they're a married couple. One's a surgeon, the other one's an internist, and they're in their mid-40s. They have 3 kids, ages 4, 6, and 8, and they live in one of the most expensive cities in the world. They live in New York, and so they're making some decent income. They're at about they're well over $700,000 of income, and they had also accompanying expenses along with that. They have a live-in au pair to take care of these kids because they had a crazy schedule, and some additional childcare expenses as well.
Thank you very much. So Dennis, now that you've set the stage, can you tell our physician audience what is the life insurance issue that Altfest identified for these physician clients, and how did it come up?
Yeah, so it's funny, it's kind of snuck up on us. We didn't realize we were going to be dealing with an insurance issue quite so quickly, but in conversation, we were talking about some of their expenses and some of the ways that they're allocating their capital, and they sort of complained a little bit about how expensive insurance was, and that's almost like saying, oh, I paid too much in taxes. But in this scenario, they were really paying a lot for insurance. They were paying well over $20,000 a year for just 2 insurance policies that covered them each for $1 million. Now, this was whole life insurance, which certainly has its place in financial planning. But for their specific situation, it was just not enough coverage, and it was way too much in terms of the expense. And we caught it just by happenstance in the initial conversation where we were talking about their expenses.
And actually, you bring up a great point, Dennis, which is that because we're comprehensive wealth management advisors, we don't just look at insurance, or we don't just look at, let's say, taxes. We look at your whole financial life, and we make sure that everything is optimized. So when we look at everything, we usually find the usual suspects of things to identify, which we often talk about, but we often find things that the physician clients who come to us, they had no idea that there was an issue, and we're able to uncover that for them, fix it for them, and help them get stronger financially going forward.
Absolutely, and we do so impartially, without getting the insurance commissions. This is not a pitch by any stretch, but it is important to understand, right, that we are impartial and objective when it comes to placing some of these products, and so there is no commission on it for on the back end if we say purchase A versus B, and our compensation stays the same, which is I think why we were able to give them a really good recommendation that worked out in their best interest.
Yeah, I know that's one of the things that I really like about Altfest working here is that since we're legally fiduciaries, 100% of the time we're legally required to always put our physicians' clients' interests first. We can be completely objective, and no matter what advice we give, we're not getting any remuneration. The only fees that we get are the people who we're 100% for, who are our clients.
Exactly.
So then, Dennis, how much life insurance, you said they were a little bit underinsured, how much life insurance did they end up actually needing?
Yeah. So again, going back to understanding their situation, right? They're making $700,000 a year. They have 3 children who they want to put through private education, both starting from elementary school all the way through their undergrad and potentially graduate degree. They have the au pair that lives with them, who they have to pay for, as well as just the expenses of living in Manhattan. So
Sure.
They if one of them, even in the lower earning one, were to pass away, the individual who was left over, who was the surviving spouse, I should say, would not be able to make ends meet, regardless of how great their income is. And in fact, they probably would be able to work less, at least initially, due to the loss of a spouse. So it's not a conversation that we like having. It's certainly not a pleasant conversation,
right.
but it's an important one because it all too often goes untalked about. It gets ignored and just sort of shoved to the side for other more urgent, more pressing matters, right? So what we actually, there's a slide here that shows what we were able to do in terms of analyzing their insurance need. And so their mortgage was, they needed to cover their mortgage if either one of them passed away. That was about $1 million. The daycare and private schools are about $40,000 a year between all 3 of the children for the next 10 years or so. That needed to be covered. We also, one of them also had student loans left, so they needed an additional $200,000 in coverage. And then the college, just the college for those 3 children, and we only looked at potentially undergrad and maybe only 1 or 2 of them going to grad schools. But they needed about $1.5 million just for making sure that their children were educated should one of them pass away. And then lastly, this is the one that we sort of went back and forth on and debated: how much do you want to leave for your spouse, right? You can joke about not wanting to finance an extravagant lifestyle just because you passed away, but at the same time, you want that person to not feel the pressure of
right.
needing to provide for those 3 children and being able to take some time off of work, or maybe go into an area of their field that requires less time, but maybe pays a little bit less.
Sure.
And so you want to give them a good buffer to be able to spend that time with their children as the only remaining parent. So they landed on $5 million. There's certainly a lot more of a conversation that went on there, but at the end of the day, they needed each about $8 million of coverage. And so if you listen to some of the rules of thumb that say, oh, you need X or you need Y, those are nice, but they don't really help you understand why you're buying coverage, and they don't help your family understand what to do with that death benefit once it's paid out, because there's less planning that goes into just using it rule of thumb. So this approach was really great because it not only gave the individual an understanding of what they were paying for, but the spouse what to do should the worst happen.
Right, I think that's also a great point that you make, is that there's no cookie cutter solution. You have to look at every client situation, determine how much coverage you need, and rules of thumb are better than nothing, but the best thing is a comprehensive solution that's tailored to the specific physician couple.
Exactly.
So, wow, that's amazing, Dennis. I mean, they had about $1 million of coverage each. Looks like they actually settled on that they needed about $8 million each, woefully underfunded. But then, you could definitely see, playing devil's advocate, oh my gosh, this is going to cost a lot of money. We can't afford $8 million. So how did Altfest find good coverage for them? What did you do?
Yeah, so that was certainly their main concern, right? If we're complaining about the premiums on $1 million policy, why are you suggesting 8, right? And won't that eat into our ability to save for retirement and college, all these things? Absolutely right. The issue was that they were thinking that we were recommending, or the potential confusion could be if we were recommending more permanent insurance. That tends to be more expensive. But we weren't. We were recommending a term policy. Now, term policy, for those that may be unaware, it works almost like auto insurance, where it'll cover you for a certain amount of time. If you don't pass away, which is a good situation, they don't pay out. Right. So the premiums are much lower because you don't recoup them unless you pass away. And so those term policies, we determined they needed them for about 20 years. So they're much cheaper, though, like incredibly cheap compared to a permanent insurance policy. So if you look up on the screen, we actually ran just a couple of quotes for them. on Policy Genius. Now, this is just for us to give them an idea of what their expenses would be. But for two 45-year-olds, a male and a female, we ran the numbers on a 20-year policy for $8 million. If you're in decent health, it would only be about $600 to $700 a month, compared for $8 million in coverage for something that they were paying close to the same premium on, actually considerably more, for only $1 million. So we were able to get them 8 times the coverage for roughly 2/3 the price. And that's the power about, the power of selecting the type of coverage that you need for the right liability, right? And which is why we went into that whole analysis of what their needs were.
Right.
But yeah, it ended up working out well for them. They ended up saving a good amount of money and put that towards some of their other goals. Actually, we did recommend something along the lines of investing it, but I think they decided on using it for vacation, which is A-okay.
Wow, Dennis, that's amazing. So you gave them more coverage at a lower cost. Great job in terms of optimizing their life insurance situation for them about an issue that they weren't even aware that we could help them with. So I know you give our physician audience a great deal to think about. They're hopefully pulling out those policies right now, and maybe wanting to give us a call so we can do the same thing for them. But thank you so much for being on the channel today. We really appreciate it.
Absolutely. Thank you for having me.
If you'd like to discuss the information explained in today's video, receive a complimentary review of your investment portfolio or a retirement readiness analysis, or discuss any other personal financial planning areas with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732 or by emailing Jesse at his email address, which is also in the description of today's video. If you like today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we release a new one. If you think that a fellow physician would find this video interesting or useful, please feel free to share it with him or her to help them strengthen their personal finances. Lastly, as always, if you have topics you'd like us to cover, questions you'd like us to answer, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you. So please give us your comments in the comments section below. Well, that's all for now, physicians. Thank you so much for being with us in today's video, and I look very much forward to being with you in the next one. Until then, please keep optimizing your finances, or let us help you if you'd like. It would be our honor.